Hello guys, welcome back to my YouTube channel Option Behavior. So today we are going to discuss about one of the a multi-leg strategy, okay, wherein we would be buying some of the options and we would be selling some of the options, okay, of different expiries actually, okay. So basically this is a mixture of a different way of calendar hedging you can say. Okay, so normally this strategy is gonna be very useful wherein if you see like after deploying this strategy, if you see this loss area, right, if this becomes very because of some mispricing or because of certain events, most of the times you will see like the range between this loss area, right, so this becomes very narrow ranged. So in that scenario this works very well, and apart from that, even if you are expecting at least 2 to 300 points movement in Nifty, at least in that week, okay, in the current weeks of expiry. So in that case scenario also you can deploy this strategy. But overall, in any situation, whether there is a risk of, if you think of high risk, weeks, right? So if there is a possibility of dropping the weeks or rising the weeks, so in all kind of conditions of weeks, this is going to be very useful because here we are deploying and we are actually buying and selling some of the options in such a way that in all the conditions of weeks this works well. The only thing is that if you see like if you're getting some narrow range like between 150 to 200 points, so in that case most of the times, right, market uh, maybe in 1 day or 2 day it takes that movement. 100 200 points is not a big deal nowadays, guys. So this strategy works very well in such situations. So basically you will get formally if you want to deploy this strategy, then it should be deployed at the very beginning of the new monthly expiry. Okay, means the current monthly expiry that is going to begin. So the first day of monthly expiry, on that, if you deploy this strategy, this works well. Okay, because we get all the required conditions which we actually need from this strategy. So let us discuss like how this to be deployed and when, and we will also see the results of this by doing the back testing and all. Okay, so let's start without wasting time. So I've just taken this current month, right? That is, I mean, sorry, the January month. That is the last month expiries. Okay, so the last month expiry would have started obviously on 31st of December, right? Because anyway, the last Thursday of this month of December was on 30th, right? So uh, the first day of January expiry, right, would have already started on 31st of December, right? So I've just taken that into consideration, and uh, the 6th January would be the first date. 6th January, would be the first expiry, right, of this new month, and then 7th and 6th and 13th, then 20th, then 27th January, right? So these are four expiries basically, right? So what we have to do, guys, first, okay, first let me show you the way it is put in, okay? So what we have to do, so actually here we want to take the advantage of delta movement. If you are at least having some basic knowledge on Greeks, okay, so here we actually try to achieve the delta movement because we are just trying to avoid this narrow range. If it has got the capacity of skipping this basically it should be escaping this level, okay, this specific zone, then in that case it's gonna work, right? So for that we need the delta to be uh, delta moment faster, right? So in such scenario this works well, and whatever be the wicks, right, respective of this, even if it rises or falls, we are gonna get profit out of that also, but it needs movement. in any direction, right? What do we do here? Okay, so here what we do normally is we take the ATM options. Okay, both call and put. So for example, I came at 9:35 on 30th of December, and I saw, okay, this is trading at 300, 70,300, right? 37 the spot price. Okay, so and that's why I've taken 17,300 call input. So what I've done is I have bought these options. Okay, of current expiry I have bought, and what I've done is I have sold the immediate next expiry of this month, right? That is 13 January is the next expiry. So of that expiry, we have sold what? The same ATM call input, right? You can see 70,700 put. We have sold at 183 rupees and call at 228, right? So similarly, we will again go ahead with the next month's next week's expiry, which is on 20th January, right? So again here we have sold. Okay, now so these two are sold, okay, of 20th. So the monthly expiry which comes on 27 January. So in that case we have bought this option 17,300 put and call. We have bought it. Okay, so actually we are um, selling two expiries and buying two expiries, right? So you will not you will not face that much margin would also be less actually, okay, because we are almost buying the same number of options we are buying and same number of options we are selling, right? So there is no problem of margin. You will hardly get, I think around 60,000, within 60,000 it should be executed. Okay, so basically, here there is, there is a concept of all the Greeks. Okay, even if VIX rises or falls, and we have, deployed this strategy considering all the factors which impacts the Greeks basically. So in most of the scenarios, we should be in profit. Okay, it just needs little movement, like 100 or 150, 50 months movement, and you will be in good profit. Okay, so let's start our testing. So 9:35, I'm just moving with 30 minutes. Okay, so market is almost at the same place. No movement. Okay, although you are seeing this like the graph is changing, right? But this is actually not true. The reason is when you do some back testing with different calendars, so it behaves in some weird way. So this is not what you are seeing. Okay, this will not happen in real scenario. It seems like it has become lossless, right? But this is not the scenario actually. Okay, and one more thing to be clear first, like maybe you would have seen previously, like the loss was around 7,000, but that is actually not that much loss. Okay, the loss will not be that much because we are not. We have different expiries of options, right? So, but Offshore considers all options to be expired at once, so that is why you are seeing that. Anyway, so. It seems like it becomes lossless, so that is the reason you are not seeing any max loss over here. Okay, but this is not the case. You might see some losses in between, but ultimately see now it has become normal, right? And you will see the losses also. So yeah, it is almost 1:1 on or maybe you know zero point 0.8 is to 1 like that. So it just needs a little movement. That's it. Okay. So I'll just do the back testing, and whenever it enters in any of the green zone, guys, okay, you should exit this position. Okay, you should not go into, in that mode of achieving more and more. Okay, so almost 1 day is gone. Okay, because this is free 13:20, right? So almost 1 day is gone. Now we have come into the next day, right? So next day again, market has taken little bit movement, as you can see if I go up, right? So yes, not little, in fact 100 points of movement. has already happened, right? So 100, 120 like that. So uh, this is quite good. That is what we need actually. Okay, and this be it in any direction, I don't care, but it should have some movement. So you can see on the next day itself, it is entering into the green zone, and so it is now 1400, 800. See now 2200, right? 2400. Now again, we are entering into the third week of expiry. Okay, so the reason you might see, some fluctuation over here because some of the options maybe, is not traded at that point of time. Okay, okay. So that is the reason you might see some differences over here, but at least uh, we are in good profit area, right? So if we want, we can exit, but still, let us just see if market takes one directional move, then we will surely get good profit. So now 4th January, 5th January, right? 3000 profit. So we are almost getting the same, we are almost getting that uh, the maximum profit, right? So that is what since it was at 300 and now it is 800. So it has taken a big movement. So you have seen this much of profit. Okay, but even if it would have taken a moment of 200 300 points, then you should be in good profit. So this is what this strategy is all about. Okay, means here the only advantage of deploying this strategy is even if the VIX rises, or falls. So in both the scenarios, you will be, I mean, your positions are hedged in such a way that it will not be giving losses so easily. Okay, because if VIX crashes, right? So although you would be seeing the options which you have, uh, which you have sold, right? So from that you'll be getting some amount of profit, and the options would be giving losses from which we have bought. But overall, it's a good mixture. So you can see a good number of. I mean, there is very high chances of making profit out of this strategy. So this is what it is, and so I hope you like this video, guys. This is a very short video, okay? But if you want to deploy and if you see, you can see whatever the condition that I have explained in my video. So if you see those conditions are meeting, then you can deploy this strategy. Okay. If you do not have any view on the market and if you're also expecting, some movements in the market, especially in Nifty, then you can deploy this strategy. So thank you so much, guys, for listening to me patiently, and I'm sure you would be liking this video. So please keep me encouraged to make such videos in future. Thank you so much.